Aditya Sood is now joining us. He's Portfolio Manager at InCred PMS. Aditya, great to have you with us here. Thank you very much. So the markets come up nicely and it's practically kind of shaken off the correction that it saw from mid-December all the way to early this week. What's your sense? I mean, is this going to last in the near term, or are we to expect more surprises?
Well, I think so. Last year has given us enough of surprises that possibly, cumulative in our investment careers, we have not seen. I think so. We are in an environment wherein the surprises hopefully will come to an end. And the outlook seems to be like we would be in a consolidation sort of a phase for first half of the next calendar. And we hope that, risk assets fare well, as in when we see peaking of rates by the US Federal Reserve. So that is what we are hoping for, really. But in terms of markets, obviously, it is becoming more narrow in terms of moves. As we have seen, a lot of IPOs are disappointing. I think so. It is back to companies which will possibly under promise and over deliver. So we are in that kind of environment because essentially there is limited scope for growth surprises to come from. So essentially it is going to be to companies to perform in terms of, either the earnings growth or the guidance. That is what we hope for going forward.
Indeed. Sula Vineyards, that was one of the recent listings. Aditya, it's trading at 329. The issue price was 357. Another one, KFinTech, 343 is where the stock is currently quoting at. The issue price was 366, and we know what happened with Elin Electronics today. That's down 7.5%. I think even Aban Holding as limited is perhaps lower than the issue price, and perhaps even Landmark Cars. So many of these recent listings which have taken place in the month of December, in the second half of December, have actually had a very poor response. Even the subscription was not great. Across the board, it was just 2-3 odd% thereabout. There you have it. Even Landmark trading at 464, the issue price was 506. So all of them which have debuted on Dalal Street in the last fortnight have had a dismal performance in the early days. Aditya, afternoon. Everyone that we're speaking to seems to suggest that 2023 is going to be a tale of two halves. The first half is going to be weak, led by weak earnings coming in from the US markets, which will have a trickle-down effect across the global markets. But things will pick up in the second half of the year. But that's predicated on a Fed pivot, or the news coming out of Fed not being as bad as what the market is perhaps perceiving. What if that doesn't play out? Because right now, at least, the Fed commentary has been very consistent about rates being higher for longer. What if through 2023, the terminal rate stays above 5%? Then what happens to the performance in 2023?
I think so. In that environment, clearly the focus would be on how the central bank policy within emerging market, is held up. What we have seen over the past year is that, within the developed market central banks, if you had to, think about the Fed, and if you think about, the Bank of England, Bank of Japan, ECB as one bucket, and you think about all the emerging market central banks, including the RBI, Central Bank of Indonesia or Brazil, clearly, we have seen divergence in terms of markets. And that was predicated on the belief that, emerging market central banks have got a better understanding of, how to deal with these high inflationary periods, because they are so periodic over the last decade, in the sense that RBI, it is our core belief that the Reserve Bank of India has got a better experience of managing inflation within the emerging market central banks. So our view is that, from a Fed standpoint, Fed is critical, but clearly the focus will move within a Fed to emerging markets. And within that, we have seen, India outperforming over the past year. On top of that, we are also witnessing very sharp, derating of sectors. So, for example, if you look at IT, as a sector over the past year, I don't recollect a time wherein, but for the global financial crisis, the index itself was down, close to 20 odd %. Now, if you look through, there are many companies which are now trading at much reasonable valuations. We also know that, these companies have got better experience in terms of, how they can manage cost in a down cycle. More importantly, the 3-year outlook for the sector is reasonable, in the sense that still we are talking about budgets going up, digitalization as a trend. If you look at engineering, research and design within that sector, what we believe is that, it is going to be a huge winner over a 5-10 year period. So there is a short term, there is a trade-off between the short term and the long term, basically, or the medium term. That is how I would like to read it. From a standpoint of attractiveness, I think so there are many sectors which are very attractive today. For example, healthcare or IT. That is where, we are placing a lot of our incremental bets. We have just cut some exposure on the financial side over the past 2 months. So we find these spaces, interesting. So there is a lot of divergence. Even if you look at the small cap index performance in the last calendar, it is broadly down 20%. So what I have experienced as a small mid-cap manager is that, there are years wherein small and mid-caps don't do well, but there are years when you get a very large outperformance. Possibly we are headed somewhere in the next, 12 to 18 months, we are headed into that environment wherein small and mid-caps would really stand out in terms of performance.
Small and mid-caps will stand out in terms of performance. And IT and healthcare cut weight in financials over the last 2 months. These are banks, or you paid back in banks, or you had NBFCs where you've taken money?
So it has been a combination of both. We have upped our exposure on the small finance bank side. One small finance bank, wherein they have a major portion of book coming from gold loans. Obviously, gold being an asset class wherein we are reasonably constructive for next year. I think so, and that is what is getting reflected in the price action as well. We believe that rural recovery is a theme, going forward. As we get into this environment wherein food inflation hit, everybody hard in calendar year 22. What we expect going forward is that, rural recovery should help. And that is already started to reflect in, commentary of FMCG companies of late. If you look at a Parle or a Dabur, they've been talking about some bit of recovery on the rural side. So we believe that that is a good theme to, sort of bet on. But clearly, one has to bet on sectors which have underperformed in the last year or so. And hopefully these the sectors are secular sectors. They have a very low element of cyclicality from a 3-year perspective. But obviously, there could be a year wherein IT or pharma or healthcare is down. And these are the opportunities wherein we will look to capitalize and build portfolios.
What's the extent of a recovery in the rural market? You said your chats with companies like Dabur, Parle-G seem to suggest that perhaps the rural stress has bottomed out and things are now turning around. Could you tell us more about this? What's the extent of recovery and what are they anticipating now in the next 3 months?
So if you look at, the commentary of most of these FMCG companies over last, let's say 6 months back, the narrative was more towards, inflation and whether, because everybody had to take a price hike in an environment wherein cost inflation was reasonably elevated. So the question mark was that, whether this kind of cost could be absorbed over a period of time. So we are at a very, very early stage of recovery as far as rural is concerned. On top of that, obviously, the biggest caveat here, obviously, is monsoon. And, in FY24, obviously, we are headed into election year. Normally, we have rural doing well pre-election, and that is what we have experienced over the past election cycles. So I would say that there is modest recovery, but, obviously, focus would shift towards, and it has been a year wherein, water reservoir levels are okay. Crop both on the Kharif and the Rabi side has been, okay. Just keeping our fingers crossed that we can have, a good year of monsoons. I think so that would have a reasonable impact in terms of both income levels as well as, net worth of or balance sheet repair, if I have to call it, because if gold goes up, obviously it helps to repair the rural balance sheet as well.
All right, Aditya, we'll leave it there. Thank you very much. Have a wonderful 2023. All the best for your portfolio, for your investors, to you as well. Thanks very much for joining us here on this program. Well, the market is doing